Hi and welcome to another edition of our weekly market outlook report for the week starting Monday the 25th of May. We have a much quieter week ahead of us, which starts with US markets closure for Memorial Day holiday on Monday. On Tuesday, we should be on the lookout for US housing and consumer sentiment data. Going forward, US Richmond Fed Manufacturing Index for May will be closely watched on Wednesday. On Thursday, the economic calendar will get a little bit busier. The main points are reserved for US durable goods, jobless claims, and also preliminary GDP Q1 data. US crude oil inventories and Japanese unemployment rate, retail trade, and industrial production will also be released. The week will finish on Friday with Eurozone Consumer Price Index data, US personal consumption expenditure, and Michigan consumer sentiment figures. Now, let's take a look at few markets. Dow Jones, Wall Street 30 is moving sideways in something that appeared to be a shoulder, head and shoulder pattern which didn't play out. So there was a shoulder, head and shoulder with a neckline. We talked about that last week. Instead, the fake out to the downside and a push higher, and now we are consolidating here in this coiling price action, which appears to be indicative of an energy buildup. These type of patterns, they have the tendency to break to the upside, but be careful. US markets are closed on Monday. So we have a shorter trading week next week. Key trading level for us to watch is at the cluster of these lows towards 24,250, 24,200. Bulls are in charge above that level, and in particular above the breakout of this falling resistance trend line. We can draw it in two different ways, either by connecting the wicks or the closing levels, pointing towards 24,620, breakout above that level, 24,700, 24,800, possibly even 25,000 is on the cards, which would be an extension of this spike higher towards the breakout level. Keep an eye on S&P at 3,000, 3,005. That's 200-day moving average for S&P. So there is a correlation between Dow and S&P. Alternatively, if you see a dip lower and a loss of these levels here, we could dip lower, targeting 24,050, 24,000, nice and round number. Loss of that level could target this area here as a logical zone of support at 23,830, 23,700.